Topic of our today's video is 10 common type of investments and how they work. Investing can intimidate a lot of people because there are many options and it can be hard to figure out which investment is right for your portfolio. This guide bulk you through 10 of the most common type of investment from stocks to crypto and explain why you may want to consider including each in your portfolio. If you are serious about investing, it may take sense to find a financial advisor to guide you and help you figure out which investments can help you to meet your financial goals. Number 1 on our list are stocks. Stocks are also known as shares or equities. Might be the most well known and simple type of investments. When you buy stocks, you are buying an ownership stakes in publicly traded company. Many of the biggest companies in the country like General Motors, Apple and Facebook are publicly traded, meaning you can buy stocks in them. How you can make money? When you buy stocks, you are hoping that price will go up soon. You can then sell it for a portfolio. This risk of course is the price of stocks could go down, in which case you would lose money. Number 2 on our list is bonds. When you buy a bond, you are essentially lending money to an entity. Generally, this is a business or a government entity. Companies issue corporate bonds, whereas local governments issue multiple bonds. The US Treasury issues Treasury bond notes and bills, all of which are debt instruments and investor buy. How can you make money? While the money is being lent, the lenders get interest payment, and after a bonds mature, this is you have held for contrary determined amount of time, you get your personal back. The rate of the return for bond is typically much lower than its for the stocks, but bonds also tend to be a lower risk. This is still some risk involved. Of course, the company you buy a bond from you could fold or company could default. Rarely bond notes and bill, however, are considered very safe investments. Number 3 on our list is mutual funds. A mutual fund is a pool of many investment company that invested broadly in a multiple number of companies. Mutual funds can be actively managed or passively managed. And actively managed funds have a fund manager who picks securities in which to put investors' money. Fund manager often try to beat a distinct market index by choosing investments that will outperform such an index. A passively managed fund, also known as an index fund, simply track a major stocks market index like Dow Jones Industrial Average and S&P Multiple Average and invest in a broad array of securities, equities, bonds, commodities, currencies, and derivatives. Mutual funds carry many of the same risk as stocks and bonds. Depending on what they are invested in, the risk is often less through the easier because investments are naturally diversified. How can you make money? Investors make money of mutual funds where the value of the stocks, bonds, and other bundled securities that the funds invest in go up. You can buy them directly through managing firm and discount brokerage, but note there is a typically minimum invest you will buy an annual fee. Number 4 on our list is exchange trade funds. Exchange trade funds are similar to mutual funds in that they are a collection of the investments that track a market index. Unlike mutual funds, which are purchased through a fund company, share of EFTs are bought and sold on the stock market. Their price fluctuates throughout the trading day, whereas mutual funds vary in simple the net asset value of your investment, which is calculated at the end of each trading session. How can you make money? Exchange rate funds are often recommended to new investors because they are more diversified than individual stock. You can further minimize the risk by choosing an exchange rate funds that tracks a broad index. And just like mutual funds, you can make money from an ETFs by selling it as it gains values. Number 5 on our list is certificates of deposits, CDs. A certificate of deposit is a very low risk investment. You give a bank a certain amount of money for a predetermined amount of time. Where that time period is over, you will get a principal back plus an predetermined amount of interest. That longer the loan period, the higher your interest rate. How can you make money? CDs are good long-term investments for saving money. There are no major risk because they are FDIC insured up to 250,000, which would cover your money even if your bank were to collapse. That said, you have to make money. You need money during the term of CDs as there are major penalties withdraw. Number 6 on our list is retirement plans. There are a number of types of retirement plan. Workplace retirement plans sponsored by your employer include 401k plans and 403b plans. If you don't have access to retirement plans, you could get an individual retirement plan IRA of either the traditional or root variety. How can you make money? Retirement plans aren't a separate category of investment per se, but a vehicle to buy stocks, bonds, and funds in two tax advantage way. The first let you invest pre-tax dollar as with an traditional IRA. The second allow you to withdraw money without paying taxes on the money. The risk for the investment are the same as if you were buying the investment outside of the retirement plan. Number 7 on our list is options. An option is a somewhat more complex way to buy a stocks. When you buy an option, you are purchasing the ability to buy or sell an asset or certain price at a given time. There are two types of options: call options for buying assets and put options for selling options. How can you make money? As an investor, you look into the price of stocks with the hope that it will go up in a value. However, the risk of an option is that the stocks could also lose money. If the stock decreases from its initial price, you lose money of the contract. Options are an advantage investing in technique, and retail should exercise certain caution before using them. Number 8 on our list is annuities. Many people use annuities as a part of their retirement savings plan. Where you buy an annuities, you purchase an insurance policy. In return, you get periodic payment. Annuities come in numerous varieties. They may last until death or only for a predetermined period of time. That may require periodic premium plan or just one upfront payment. They may link partially to the stocks market, or they may simply be an insurance policy with no direct link to the market. Payment may be immediate or different to the specific date. They may be fixed or variable. How can you make money? Annuities can guarantee an additional stream of income for the retirement, but while they are fairly low risky, they aren't high growth. So investors tend to make them as a good supplement for their retirement savings rather than an internal source of funding. Number 9 on our list is cryptocurrencies. Cryptocurrencies are a fairly new investment options. Bitcoin is the most famous cryptocurrency, but there are countless others such as Litecoin and Ethereum. There are digital currencies that don't have any government banking. You can buy and sell them on cryptocurrency exchange. Some retailers will even let you make purchase with them. How can you make money? Cryptocurrency often has wide fluctuation, making them very risky investment. However, can some investors use them as an alternative investment to diversify their portfolio beyond stock and bonds? How can you get them cryptocurrency exchange? You can get them easily on cryptocurrency exchange. Number 10 on our list is commodities. Commodities are physically products that you can invest in. They are common in future markets where products and commercial buyers. In the other words, professionals seek to hedge their financial stakes in the commodities. Retail investment should make sure that they truly understand future before investing in them. Partially that's because commodities investment runs the risk the price of commodity will move sharply and abruptly in either direction due to the sudden event. For instance, political actions can greatly change the value of something like oil, while weather can improve the value of the agricultural product. Here's a breakdown of the four main type of commodities. Number 1, metal. Precious metal like gold, silver, and industrial metals, copper. Number 2, agriculture. Wheat, corn, soybean. Number 3, livestock. Pork, bellies, and feeder cattle. Number 4, energy. Crude oil, petroleum product, and natural gas. How can you make money? Investors sometimes buy commodities as a hedge for their portfolio during inflation. You can buy commodities indirectly through stock markets and mutual funds on ETFs and future contracts. At the end of the video, we are going to discuss some investing tips. It can be sometimes help to have an expert in your corner where investing. Finding a qualified financial advisor doesn't have to be hard. Smart Assets free tool matches you with up to the 3 financial advisors who serves your area, and you can interview your advisors, match at the no cost, decide which one is right for you. If you are ready to find an advisor who can help you achieve your financial goals, get started now. Number 2 tips is, if your investing pay off, you may own the capital gain tax. Figure out how much you will pay when you sell your stocks with your capital gain tax calculator.